a moment when people are starting to get twitchy again about Europe, I want to check in with one of the largest European banks, Spain's Banco Santander. For my money, Santander is one of the best, least heralded financial institutions on earth. It's stable, it's well capitalized, and it's making a big push to expand into the United States and doubling down on Latin America. Now, earlier today, I got a chance to speak with Anna Botin. She is the chairman of Santander, about her vision for the company and her ambitions here in the United States. Pretty amazing. Take a look. Now, you run the largest bank that many people in America have never heard of. Can you just talk about the scale of what Banco Santander offers?
Sure. Yeah, we have scale, not just global, but locally. So we want to be big in the markets where we operate. And in Europe and the Americas, we operate in 10 markets. We have 144 million customers. And very importantly, we have relevant market shares in all the places where we operate.
If you ask most Americans what's the largest bank in Europe, they would say, well, Deutsche Bank or some bank in France. It's Banco Santander.
By value, yes. By market value, we're the largest, probably around 20% more than the next one.
Now, when you go to Latin America, you're the bank of Latin America. And I know you just bought in the rest of your Mexican business. Must offer a lot better returns than people realize.
Latin America has a huge unbanked population, but very importantly for a bank, the middle class has grown a lot over the last few years. I always say the lows are always higher. And so you see stronger institutions in many countries, like Brazil, for instance, and you're getting good growth. Very importantly, there's many businesses in payments, for example. So we make 50% of our profits in Latin America, 50%, but it's only 28% of our balance sheet. Okay. So there's a huge opportunity for growth going forward.
I'm glad you brought up the balance sheet. You had both a shareholder meeting, then you had a huge, fabulous analyst day because you were very transparent. And what I saw is that there are people who are worried about your balance sheet, but you've raised a huge amount of cash. To me, it seems like a false worry. So
look, we had a 3-year plan, which we finished in 2018. We delivered on everything we said we would do 3 years ago. Even though Brazil had 9% drop in GDP, Argentina had problems, negative rates in Europe, and we went from 8.27 to 11.30 in CET1. Our profitability went from 10% to 11.7 in terms of return on equity, and we grew in the right way. This is super important. We grew in the number of customers. We doubled digital customers to 32 million. So we really did everything we said we would do.
Our viewers love dividends. You offer a very attractive yield. They're always asking me, well, Jim, isn't that too big? Is there something wrong? I just think that I'd like to dispel that because you generate a lot of cash.
We do, yeah. So we generated over these 3 years 25 billion. Of that, 13 billion went to our shareholders. 12 billion in dividends, 1 billion for the AT1s and the COCOs. We accumulate.
That's an obscure bond, but very important for people who follow the banking industry very closely.
Yes. It really protects the debt holders. It comes between the equity and the pure debt. It's sort of in the middle. So that's 13 billion went to shareholders of the 25, 2 billion net went to acquisitions, and 18 billion went to reinforce our balance sheet.
Market share, United States, 3%. You could double that and still be well within the range of what the Fed is willing to have. Are you going to?
So our target, not just in the US, but all over, is organic growth. You know, when you have 144 million customers, that's big. Right. You know, that's probably double Wells Fargo.
Right.
I would say they're not as rich as Wells Fargo, but customers, but they have much more upside, right? So in the US, we want to do the same. We want to leverage our global scale, but I see ourselves as a community bank with a relevant presence in Europe and the Americas and being very close to customers. We have 13,000 branches across the world. That's the biggest branch network of any bank in the United States.
Right. Now, but tell me, you also have a stock which is a consumer finance company. You've got these different stocks that are related to you. How does it, if someone buys the consumer finance company, which you own about 70% of, what is that a measure of? Is that the community?
So this was a strategy that was in place before we arrived.
It's not your strategy.
Well, you said it. You know, it is what it is. We intend to keep it roughly as it is, even though we did just launch a takeover of our minority shareholders in Mexico because we thought the stock was very undervalued. So, you know, being listed it's fine.
Okay.
It's not a problem, but it's not a something we would look to do more of.
All right, so speak to me about Brexit, because you've got a handle on Europe like no other. I'm hearing people, very important business people, saying there is not enough food in the UK. I mean, is that scare tactic?
Look, Brexit is not the end of Europe, okay? And I always try
Does
to...
it bore you?
No, it doesn't bore me,
Okay,
because
I
I
wasn't
have,
sure.
I have lots of customers in the UK. We're one of the biggest banks in the UK, and we're one of the biggest banks on the continent. Spain, has a lot of Brits living there. So what we've tried is to really make sure we can deliver for our customers. But there's a very important point. Europe needs more integration, wants more integration. Right. And Britain was never going to be a part of that. So if you see the positive of this, it's going to allow for faster integration in Europe, which we need. And it's going to allow, and I think all of us, big boys or big girls, we need to find a great understanding, because we have much more things that, bring us together. And so we need to find a good way of working together going forward.
You used the phrase "big girls," and I want our viewers to know who you are, because frankly, other than Beth Mooney at KeyBank, there aren't a lot of big girls. Who are you, and how did you get to this exalted position?
Well, I started my life in the U.S. So I actually worked in Wall Street for 8 years, and
JP Morgan.
JP Morgan, yes, and then I've been at Santander since 1990. Santander has been around for 165 years. I say this with a lot of caution, but we've paid a dividend for 50 years, every single year. I've been in banking all my life, except for 3 years when I was asked to leave or fired by my father. And then I came back. And
we could have a special on that, fired by your father, right?
We could, yes. I was an entrepreneur for 3 years, and I learned what it was to be on the other side of the table.
Okay.
From a bank.
A little bit of a soap opera there, just diversion, not important. You brought it up. I was not going there. Global opportunity. You just bought in Mexico. Is Mexico the greatest place on earth to invest right now, both because of interest rates and because you've introduced a mortgage product? When I started buying in Mexico, everything was cash.
Look, every time politicians or government officials in Europe start messing around with the mortgage market, I remind them of what happened in Mexico in the 90s. Nobody only people who didn't need it could get a mortgage. And so, I'm very proud that we're actually offering one of the best rates in mortgages in Mexico right now, around 9% for 15 years. And there's a lot of demand for
And any country in South America really stand out as some place that people would think in this country is uninvestable, but that you know better because you are a truly global banker?
Look, I was with a competitor of yours 3 years ago saying Brazil is a great place, and they were saying that's going to be a problem for you. We have doubled our profits in Brazil over the last 4 years.
Well, this competitor was clearly a fool. When I look at what you're doing, I was going to disagree with you. I was going to say your greatest opportunity is the greatest banking environment in the world, which is the United States.
I 100% agree.
Okay.
I think the United States, I don't think. The United States is a third of the banking market in the world. There's $1 trillion of trade between the United States and South America and Europe, and we are the best bank to service customers, mid-market customers.
Right.
We have customers in the Midwest that do auto parts, where we help them in Mexico and Brazil, and vice versa. Customers we help in Mexico, Brazil that want to be in the U.S. Right. We're very good in supply chain finance, for example. And so this is a huge opportunity for us because we are really on both sides.
When I think of a community bank, and I'm from Philadelphia, you are the community bank. You are the bank for the Eagles. You are the bank when I go to any events. You are the bank, frankly, for swag. Swag? You know swag?
Yeah.
Yeah. Is that Boston, Philadelphia? Is there another city that's coming next?
Look, I was at school in Philadelphia and in Boston. So I went to Bryn Mawr and then Harvard College for a year. So I know Philadelphia.
Pretty smart, Bryn Mawr. Hard to get into.
Yeah, I love the school.
Yeah.
No, look, we're a community bank, which is in many communities. But the great thing about us is our scale. We can bring our scale, so our bank in the US is as efficient as the biggest banks in the United States. So we invest in technology. We would be number 3 in this country from all the banks in terms of how much we're investing in technology. This is very important because today you can leverage that scale without losing that closeness, that relationship with the customer.
Yeah, see, if your bank were located in the United States, I think it would be a 10, not 5. It's too connected with Europe right now.
Yes, that's right.
Well, look, that's Anna Botin. She is the executive chairman of Banco Santander. Again, I urge you to look at the early April presentation they made if you're going to buy, because I need you to know that it's a $5 stock because, frankly, Europe's weak. But, wow, what an opportunity. Thank you.
Thank you.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.